Gold traders, pay attention. Yesterday's job loss claims may just have given us the biggest clue about where gold is heading next. Now, gold has spent most of this week trapped in a battle between economic weakness and a strong US dollar. On the one side, we saw the US job loss claims rise to 215,000, coming in above expectations. That's important because a weaker labor market could eventually force the Federal Reserve to become more accommodative with interest rates. And when rate expectations fall, gold tends to benefit. However, it is important not to overreact. The labor market is still relatively healthy, so 1 week's data isn't enough to completely change the outlook. What traders should be watching now is whether this becomes a trend over the next few weeks. If claims continue rising and economic data weakens, that could provide significant support for gold during the second half of 2026. The second major driver remains obviously the geopolitical tension. Any escalation in global conflicts could trigger a fresh wave of safe haven buying. Historically, periods of uncertainty and conflict have always pushed investors towards assets like gold as a store of value. Now, looking at the 4-hour chart, gold is currently trading around 4,510 area and sitting directly above a key support zone, 4,480 and 4,500. As long as buyers defend this level, the price will continue going up. But if support fails and we break below that 4,480, sellers could target that 4,4 again and even maybe go all the way down to 4,3. For now, the market remains in consolidation. And traders should focus on confirmation rather than prediction. So watch that support at 4,480, watch the resistance at 4,545, and most importantly, let price show its hand before committing to any position right now, guys. Take it slow, don't overreact, and sometimes no trade is a better trade, guys. Happy trading.